And we are live. So, hello to everyone who showed up today to watch us live. We have with us the one and only Greg Foss.
Good morning.
It is good morning for you, sir. Yeah, it's 4 p.m. here. So we've been chatting briefly for, how busy you are. You have so many different appointments and just things to do and places to go and so on. And you said that it's fulfilling and you meet a lot of quality people. Do you think, though, that we are actually making progress in the right direction? Because you know that Bitcoin died, right? It was 2009, 2022. It died at 40,000. Bitcoin is dead. That's it. Everyone forgot about it already.
I think we're making great progress. And I'm going to tell you a little story that's most important. Coming home from the Bitcoin Miami conference, which, you just look at that as a metric, okay? Last year, there was something like 12,000 people. This year, there was over 25,000 people. It was really, really well done. But the most important thing that I took away from that conference, well, first of all, I was on stage with 4 billionaires, okay? 4 separate gentlemen who each in their own way are worth over $1 billion. And 2 things from that. Firstly, they say that the people they are talking to, which are some of the most wealthy individuals and sovereign funds and investors around the world, are extremely interested in Bitcoin. And it's an education process. So from that point of view, and they are talking with the people, and I'll even quote Orlando Bravo. Orlando Bravo runs Thoma Bravo private equity fund. It's $100 billion. Private equity is $100 billion. Just that sleeve, $100 billion. So he talks with all the most powerful asset managers in the world. And he says the amount of interest is just unprecedented. It takes time for these people to get, custody in place. It takes time for them to get their investment policies, risk management operations and systems in place. But he sees the writing on the wall. I think if you looked at the number of people that were at the conference, that indicates the amount of interest. The biggest thing, though, and this is what I need to take issue with, nobody talked about the price. The price of Bitcoin is not the issue. It's the platform and the vision for the future. The price will take care of itself, okay? As you've heard me say, $40,000 is a rounding error. I don't give a shit if it's $30,000 or $60,000. They are both still rounding errors in the context of where Bitcoin is going to go, in my opinion, in terms of price. And I think I've run through this math with you on your show, but I'm going to do it again. Okay. My price target in today's dollars for Bitcoin is $2 million US per Bitcoin. Okay. In today's dollars. Now, it's a target. It's not a limit, but I've walked through how I get to that price target. It's very simply, to reiterate, there are 900 trillion US dollars of financial assets in the world. And if Bitcoin gets 5% of that total addressable market, 5% of 900 trillion is 45 trillion. 45 trillion divided by 21 million is over $2 million per Bitcoin. Again, in today's dollars, because that total addressable market is measured in today's dollars. That's not 100% certain, okay? There's no way that's 100% certain. As an aside, the only thing that is certain is fiat debasement. That is pure mathematics, okay? So we know fiat is debasing because the debt spiral is so large and the debt burden that the growth of the economy cannot even keep pace with the growth of the coupon in the interest obligation, okay? So the debt spirals are assured, which means the printing of money has to accommodate the growth of the debt spiral with nothing else. That doesn't even include deficits that governments are piling on top of the existing debt, okay? So fiats are 100% certain to debase. I believe Bitcoin goes to $2 million US per Bitcoin in today's dollars. but it's trading at 40,000. Again, I'm not 100% certain about the Bitcoin price target, but what is the market telling me my chance of success is, Plamen?
4%.
40,000
or even
divided
2%,
by
actually.
2 million.
Yeah, it's actually even 2%.
1 over 50 is 2%.
Yeah.
Okay? Listen up, you fucking clowns. If you don't do the math and understand that the chances of it going to my target are far higher than 2%, you deserve to, you know, stall on price analysis or whatever. The bigger picture is where it is going, how it is, payment rails are being adopted around the world, new investors that are interested in it. Take a pill. The NASDAQ is down 22% in the last 3 months. The NASDAQ, okay? So what if Bitcoin hasn't gone to new all-time highs? The rest of the world's getting carved and diced and sliced. Understand that this is a low time preference allocation of your time and energy into Bitcoin. We'll talk in 20 years. Don't sweat the current price environment. If you call it dead because it hasn't broken out of its price range, and I know you say it tongue in cheek as a joke, but we're focusing on the wrong thing. Focus on where the Bitcoin payment rails are going, the adoption, the countries that are accepting it as legal tender, the billionaires on stage in Miami. And these are people that know, okay? So I don't get too fussed about it. In fact, there are times when I'm happy that the price is low because that allows the people that need it most to buy it at a price that is stupid cheap, okay? And who are the people that need it most? Well, they're the countries that are less privileged than the USA and Canada. Countries like El Salvador, countries like Central African Republic, countries like Panama. And eventually it'll work its way up to G20 nations and then G10 and then G5. Because that's what happens in game theory. But be thankful right now you can accumulate the world's best store of value at a price that I view is extremely cheap.
I think that people are focusing too much on this rounding error and focusing too much on, oh, it doesn't have a new all-time high, just because they want to get rich quick without doing any work. They just want to buy something, it does 10x in a month, they're rich all of a sudden, and that's it. So it's literally about just trying to change people's perspective that firstly, no, you cannot get rich quickly. And secondly, the thing is, if you don't take actions, you're going to get poorer slowly.
That's exactly right. I mean, it's only mathematics. Your debt burden requires that you print more fiat to satisfy that closed loop, okay? It's called the error term. The fiat currency is the error term. The more you print, the more it debases, and it actually accelerates the second derivative. The first derivative is the velocity. The second derivative is the acceleration, okay? Understand that Bitcoin's only 13 years old. It's incredible what it has accomplished. It is not a get-rich quick scheme because you're measuring it against a stupid unit of account. It's like thinking you're making money on your house. You're not really making money on your house. It just takes more units of account to buy the same house because the value of that unit of account is going down. Measure Bitcoin in Bitcoin. Measure returns in other assets in Bitcoin, and you will see when you use a different unit of account, your whole perspective changes, okay? And if you're in Bitcoin to trade out of it someday for more fiat, I think you're playing the game the wrong way. Fiat is guaranteed to lose value. Guaranteed, 100%. Bitcoin is the actual opposite. It is programmed to increase in value, okay? 1 Bitcoin equals 1 Bitcoin. There's only 21 million of them for all of the world to share. I would suggest you accumulate some Satoshis and perhaps even a whole Bitcoin if you can to protect yourself against the certainty of fiat debasement.
So I've sent you, I think, the link to not to the things that I want to discuss today, but to the trailer of the conference that we did in Bulgaria. It was much smaller scale than Miami. It was just shy of 500 people there. It was a full day program with an after party. The total lectures recording is 4.5 hours. So this was actually, this was actually the lectures, and the rest is just, like the coffee breaks and the lunch break and the socializing, taking pictures with the lecturers and so on. And so we did it with the goal to firstly to get the community together, because there is a lot of Bitcoiners that are alone in the family. The rest of the people in their community are saying, oh, you're gonna lose your money on these crypto stuff and stuff like that. So that was the one reason to do the conference, so people can get together and see that they're not alone.
Was it a Bitcoin conference or a crypto conference?
I'm ashamed to admit it was a crypto conference.
Okay, so you're gonna lose money on crypto, yes. Okay, that is almost certain. But you will not lose money in Bitcoin with the same degree of probability that you will lose money in crypto. Crypto, by and large, is dangerous because a lot of them are scams. It's just the fact of the matter. Bitcoin is the only digital asset that solves the fiat Ponzi. That's all I care about. Okay, you guys can go lose your money in penny stocks. You can go lose your money in crypto. They're almost the same thing, okay? But Bitcoin is needed because it solves the fiat Ponzi. No other digital asset does that. You can't determine what the supply is of Ethereum is, because Vitalik himself confesses, well, it's difficult to determine what the supply of Ethereum is. I mean, people, why are you making it so difficult on yourself? Understand that we need to solve the fiat Ponzi. If you want to go to the shit coins of the world and go to the poker tables and bet on craps and all that stuff, you're allowed to do that. Just understand the difference between the two assets, much like Fidelity Investments report said. There's Bitcoin, and they said there's Bitcoin and then there's the other digital assets. Come on, read between the lines. There's Bitcoin and then there's shit coins, okay? That's basically what Fidelity said.
Absolutely. So three of the lectures were about Bitcoin. One was just about general finance, and two of them were just about the various altcoins and what do they mean. And one was about yield farming, and the last one was about Bitcoin as a national security matter. This was the one that we closed the conference with. So I'm bringing the topic because the second purpose of this conference was to get the recording done and then try to share it to as many people as possible. My personal lecture was about why does Bitcoin matter to me? Why is it so important to me? And I think I shared with you already the story with my grandfather that saved a bunch of money, put it in the savings account, and then during hyperinflation, he lost it all. So after we finish today's podcast, immediately after that, I'm going on another podcast in a studio where we're going to record with two personal trainers. So they are gym people, and we're going to have a podcast together. And just last week, we had a podcast with a professional Kuku national television in Bulgaria. And just 3 weeks ago, we had one with a Bulgarian rapper. And I'm mentioning this because I'm trying to get different people on my show. So we can talk about them, and also we can talk about crypto and Bitcoin
and how they relate to different people within their circle, right?
And trying to just get to as many people as possible and just explain to them what the issue at hand is and how does Bitcoin solves it. So just for 30 seconds, let me tell you the way I present it, and you tell me if I'm doing it wrong, okay? If I'm missing something important, or maybe I'm exaggerating something. So I always go to firstly the story for my grandfather, just to explain there is inflation. Sometimes it's high, sometimes it's low, but doesn't matter. There is inflation, and it's not good for you. So this is the first part. The second part is the fiat Ponzi, but it's very hard to explain to a fiat Ponzi to someone that doesn't even understand that there is a CPI, that there is central banks, that there is government bonds, and so on. So I go about it from this angle that we have, let's say you have a person that earns $1,000 a month, and he wants to take $1,000 as a loan to buy a new laptop or something. And let's say the bank says, okay, sure, let's do that. We're going to give you $1,000. You shouldn't be that much at risk. You're going to return the money with interest. So that's fine. And let's say that then he wants another debt at 500. Let's say it's again fine. But the moment he asks for 10,000, or maybe he just gathered already that much and he wants another big loan, then he becomes at risk. Is this person really going to return the loan? and you stop giving him risk. And the way I go about it, that US is in this situation where they gathered so much debt that at this point, if they ask for another loan, other countries could be like, I'm not sure, you have already 30 trillion, should we give you more debt? Yeah.
I like your style. There's one thing that the guy going to the bank has, but it doesn't have, but the USA does. And that's the ability to print money. Okay.
Yes.
So as Ricardo Salinas said in the Bitcoin conference in Miami, and there's so many good things, but he goes, one of them was, he says, if you and I print money in our basement, we get thrown in jail for counterfeiting.
Yeah.
But when the US Treasury prints money to pay back their debt, they get promoted to chairman of the Federal Reserve. Okay. So yes, you have the ability as a borrower from the US Treasury to print money. Now, taking an extreme, so did Venezuela have the ability to print money, but eventually all that money ended up on the street corner because people called the Ponzi out, right? They're not going to do it tomorrow with the US dollar, but they will do it eventually. It's just fact that every single fiat fails. It's historically, you get central bankers. In the Roman times, they were trimming the edges of the Roman coins, taking gold out of the coin, then change the type of metal in the coin. Eventually, all fiats fail, okay? I don't want the US dollar to fail tomorrow. We're not ready for it in terms of adopting a different platform. But the math that you were laying out is exactly the same, in that you lose confidence in the ability of people that are borrowing money from you to pay you back, even to pay you back ethically. Because in 1971, the US in fact defaulted on the gold standard. In 1971, when Nixon took the US off the gold standard, that was a de facto default, okay? Don't tell me the US has never defaulted. It happened 40 years ago, or 50 years ago, I guess. 50 years ago. People need to understand the reality of the situation. Now, every single country prints fiat. And what happens, and this was, I know you said there was a question about the strength of the US dollar. Do you want to get into that right now? Because right now, every single fiat is going down in value. It's just some of them are decaying quicker than others. But it's a relative race to the bottom. They're all playing the same game. So if the US dollar has depreciated by 90% over the last 100 years, that's way better than another fiat that's debased by 99%. Like, you can't barely debase any more. But the difference between 90% and 99% is the relative decay of fiat. All fiats are melting ice cubes. Think of that analogy. They're all melting. Some of them are just melting faster than others. Okay? Venezuela, well, it melted. It's done. There is no more ice cube. Okay? Argentina has defaulted 4 times in my lifetime. In my trading career. So I've only been trading for over 30 years, and Argentina has defaulted 4 times, Plamen. That's a G20 country, bud. A G20 country, which means they've never paid down a 30-year bond. It's crazy. So some of the stuff you're talking about is exactly the same thing. But yes, people need to understand these facts, okay? Turkey is a G11 country. I don't know how close Turkey is to Bulgaria. Probably, it's closer than Canada is. Okay, listen. It's over for Turkey. It's done. They're done. I'm afraid to say it. But being in financial markets as long as I have, you don't come back from that near-death experience. It's over. I don't know. I don't want that to be the case for the citizens of Turkey. It's a horrible outcome. Take appropriate measures.
I've written down Greece. I'm gonna circle back to that in a second,
Okay.
but just to finish my wrap up about how I present the Ponzi with the fiat system is that so I go through just to explain why you don't want to give another loan to someone that already owns too much and the chance of him returning it is diminishing. At that point, let's say if a bank gives a loan to a person, it becomes all of a sudden a burden because you have to chase him down, you have to ask for money,
Yes.
maybe he's gonna default and so on. And
You've heard that expression. Can I jump in? If you owe a bank $100,000,
Yeah.
you don't sleep at night.
yeah,
If you owe the bank $2 million, he doesn't sleep at night.
Absolutely.
Okay? Like, just think about that for a sec. So, you know, it's all a game of confidence. Firstly, a confidence in the lender, then a confidence in the, or firstly, a confidence in the borrower, then a confidence in the lender. Okay? Like, anyway, it is what it is. Sorry to interrupt. Keep going.
and then I go through. It's important though that if the Bulgarian left is bad and you start inflating it away, we mess up just Bulgaria. But US, when they start printing money, they export the inflation outside, and it goes all around the world because everyone holds some US denominated treasury or US dollars as a reserve in order to be able to do
reserve currency.
to be able to do international trade. And then I go through the fact that pretty much in the past 2 years, Fed have been buying their own debt. And this means literally they're printing money to give themselves money, and they're like, no one else wants to give us a loan anymore, so we're gonna give a loan to ourselves and we're gonna return it with interest, which doesn't make any sense whatsoever. And that's pretty much how I finished.
Okay, there's certain subtleties that are correct and some that are not quite as correct. Here's the truth though, look.
Yeah.
There are buyers of US government debt besides themselves. All you have to do is look at an auction and examine what's called the indirect bid. Indirect buyers are foreign central banks that are buying at every single auction. They are buying US treasuries. But one thing one huge owner that is not buying anymore is the Bank of Japan. The Bank of Japan over the last 3 months has sold $60 billion of US treasuries because the cost of hedging the yen against the US dollar is so extreme because the yen has fallen 13% that the hedging cost offsets the yield on the bonds that the Bank of Japan is earning. It's called interest rate parity. I don't want to get too granular and financial with you. Just understand, there are lots of countries that are still buying US treasuries at the auction. Some of them are selling them because, like Bank of Japan, which is one of the world's largest holders of treasuries, the economics don't make sense from a foreign exchange hedging perspective. But when it all comes down to it, the US dollar, they are very lucky to be the reserve currency of the world, okay? Because not only can they print dollars, Plamen, a better way of thinking of it is they can print oil.
Yeah.
The US can pay for oil by printing their dollar. That's a huge competitive advantage. And it begs the question, who is going to be the first country to switch from selling their natural resource energy in petrodollars and switch it to selling for monetary energy, which is Bitcoin? I think Putin is pretty close, personally. And with all the atrocities that are happening and over there in Eastern Europe, and I'm very sorry for both sides. I'm sorry for the Russians because I don't believe that they're actually being told the truth. From what I hear from friends who know Russians, they don't believe that Russia is at war. They believe they're doing something to defend themselves, etc. But without getting into picking sides, and hopefully that this ends soon, Putin is Putin. And he realizes that when the USA can restrict his access to US currency that he's built up over time, they all of a sudden restrict his access. He needs another asset. I think it's Bitcoin, personally. It makes sense from an engineer. it is Bitcoin. And he won't be the only one. You know, it would be my greatest happiness if Canada started selling our natural resource energy for Bitcoin. It's not going to happen because we have such a close trading relationship with the USA. But other countries, I believe it's going to happen. And as soon as one, it's like game theory. And ultimately, the US dollar can still be reserve currency, but US treasuries will not be reserve asset. There's a very big difference between a reserve currency and a reserve asset.
One of the things that I didn't mention is the inflation and the bond yield difference, delta, that at the moment is in the negative. I'm gonna share the screen in a second and show the chart for you to comment on it. What you see there, what does it mean? But one thing that I forgot to mention is the deficit. If the government, because it doesn't produce like potatoes to sell them on the market or cars to sell them on the market, the way the government gets funding is through taxation. And when taxation is not enough, it turns to deficit, meaning it spends more than it earns. Now there is, quite serious talk about maybe they're going to forgive student debt. And from what I've read, it's 1.7 trillion that, if I understand correctly, it's again going to be somewhat of a deficit, meaning that they are not going to get income, they're going to get an expense.
It's a deficit, 100% deficit.
So the question is like, if you're running on deficit anyway and you add additional deficit, what happens? And what happens with this chart? Can you please tell us what
well, that's okay. So this isn't about a deficit though. This is
this is different topic.
This is okay. So this is about the CPI, which is the Consumer Price Index, versus the 10-year Treasury yield. Okay, so this is important. There's a number of really good things in here. Okay. First of all, let's look at CPI, which is the black line. Okay, notice that over time, most of the time, the black line is below the blue line, right?
Yes.
And when it's below the blue line, that means that the 10-year yield is producing a real return, which means the nominal yield on the 10-year minus the CPI produces a return that allows somebody to actually make money over time.
Okay.
Because it's not being chewed away by inflation.
I have a quick question. I have a quick question. Sorry, which is very important for this chart, because this chart says that inflation is 8.5 according to the Institute of Statistics of Bulgaria. I checked it. Our inflation is 12%, and because we know that the CPI formula excludes energy like electricity bill, gas price, and rent. This to me would mean that actually inflation is much higher to a normal person than what is the official. So I'm just asking you, from your point of view, does this chart actually also is skewed, and actually the black line should be moved up with a couple of percent?
But it's bad enough as it is. Okay, so stick with this chart. I mean, this is horrible to begin with. Okay, we don't have to make it more horrible. Okay, but here's the truth. Right now, if you take the yield on the US Treasury, and actually it's closer to 3%, it doesn't matter. We'll make the math easy, okay? The difference between the yield and inflation is called your real return, yield. Right now it's negative 5%. In your case, it's almost negative 6%, but let's call it negative 5.5%, okay?
Yeah.
And notice over time, it's usually positive, right? You take your yield, which you go back to 1988, your yield was over 10%. We'll go back to 1983 to be exact, okay? No, 83. 83. Go over.
Do you see my
mouse? Over even more. What is the yield there? We'll call it 14%. The next peak over.
This one.
The next one. Okay, what's the yield there? 14%.
13.9, 14. Yeah.
Okay, 14% less CPI, which was 6%. That means your real yield was 8%. Okay? That's an 8% positive return. Now, there were times when it was negative, when inflation was really charging up. But in 1982, Paul Volcker, the Federal Reserve Chairman, he raised short-term rates to combat inflation, and it worked. Look at how it also sent the world into a recession, but it doesn't matter. It combated inflation. Okay. The last time CPI was at 8.5%, assuming that number is the right number, what was the 10-year yield?
16%.
Buddy, what is
14.
it now?
Now it's
Doesn't matter.
3.
3. Who's the stupidest person in the room? A bondholder. Okay? They're absolute morons that they're holding this instrument and trying to keep the yields down and protect their positions when in fact they should be earning something closer to double digits on the 10-year yield. It's never going to happen because if you increase the 10-year interest rate for the US debt to 10%, the debt spiral just accelerates even more. Right? We can't even keep up with the coupon right now, and it's 3%. Imagine if the coupon was 10%.
Okay, just to clarify. So this percent that we see here, the 8.5, we know what it is. It's the CPI, it's the official inflation.
Yes.
We are living in a world with higher inflation, but that's what they tell us. Okay, that's fine.
Yeah.
The other one, the coupon, the yield on the 10-year treasury bond. So this is what is the interest rate that US is paying on the 30 trillion. Is that correct?
Correct. A blended. This is only for the 10-year, but don't forget the US funds itself with
30
monthly called T-bills up to 1 year. Then it goes 1 to 5 years, and then it goes 5 to 10 years, and then there's 20-year bonds, 30-year bonds.
Okay.
And this is called the yield curve.
Okay.
It's a mixture, but if we assume it's approximately 3%, it should be approximately 10%.
Okay, so if they increase it as it was between 1980 and 1980, let's say 1990, the average percent then was about 10%, I would say, because we have a peak of 16, we have a flow of 7, so it's about average of 10. So if we increase it to 10, this means that to the 30 trillion, we must add another 3 trillion every year. For the next 10 years.
It's impossible, you see? And by the way, that's only the funded debt. Do you know what the unfunded obligations of the United States are, which include, so pull up right now, for me, while we're at here, usdebt.org. Sorry, US Debt Clock, usdebtclock.org.
Oh, sorry.
All right. In the top corner, right-hand corner or left-hand corner is your U.S. national debt, 30 trillion. You see that?
Yep.
Here's the more interesting number. Go to the bottom right-hand corner.
Here.
Unfunded liabilities.
The fuck is this?
Medicare and Medicaid. It's what people in the U.S. are counting on to pay for medical costs going forward. And it's an obligation of the U.S. government. Okay? It's the combined is 200 trillion.
This doesn't make any sense. What is I don't get it. What is this? This number is multiple times bigger than this number, and this number
is Medicare and Medicaid. You've heard of that, haven't you?
That's heard of it. Yeah. No.
That's what the bottom right-hand corner is. Unfunded. These are obligations of the U.S. Treasury that they have not raised money for yet.
But wait. Because Medicare, Medicaid is a medical assistance for free.
It's a social program.
Yeah, social benefit, social program. Okay. Yes. But it has an expense running for a month, for a year, and so on. So for how long is this? Like,
this is accumulated. This is what is owed to the. This is what is owed to the population
already.
Yes.
That's crazy.
It's crazy, dude. It's over. Don't you get that it's over, for God's sakes? Like, why do people have to think so hard about this? And if you take those two numbers and multiply it by 10%, it's actually growing at $20 trillion a year. Okay? Okay, it's sort of funny and it's sort of fucking retarded, isn't it?
No, it's laughable because it's crazy. It's so crazy.
Over.
You can't believe it's over.
How can you argue any other way that it's not over? Okay? If you are not doing the mathematics, you don't deserve you deserve to be a prisoner of the fiat Ponzi.
Okay. Listen. I'm
listening.
I'm gonna ask you a question.
Yeah.
But don't answer the question. I'm gonna ask you a question and then I'm going to tell you about Greece, okay? So the question is the following. Can US default? Has it already defaulted? Will it default? And I know you said it 1971 it already defaulted. I know. I'm still putting the question like this. Can they default? Because just literally today or last night I had a fight over Facebook because in Bulgaria we live in the past, we still use Facebook, and someone said, well, they cannot default because they have a printer and they can just print the money that they need. So going back to Greece, just to give an example, so Greece defaulted some years ago, 10 years ago or whatever. They had a national referendum where people voted, are we gonna return the debt or no? They said, no, we are not gonna do it, and that's it, they just didn't, and they defaulted. And then what happened after that, I forgot what is the number, maybe I should Google it, but it's something like their debt to GDP ratio is already way out of bounds 10 years later. So they defaulted, and 10 years later, they already again gathered a bunch of debt that they're most probably not gonna pay. So I feel like these countries that default, they're actually literally just like taking money, giving social benefits to their citizens, repairing the infrastructure, whatever, living rich, and then they just say, okay, that's it, we cannot return the money, we're not going to return the money, and because we are not living in a crazy world where we'll just start a war because someone doesn't return his debt, they just continue to do this scam, I would call it, where they just continue getting new debt and just the wheel goes on and on. So please comment.
Okay, there's a lot in there. First of all, Greece, yes, has defaulted. The USA, it is possible it defaults, but it is not likely. If Greece didn't have the European Union, it would have defaulted. So would Italy, and so would most likely France, okay? And for certain, Portugal, Italy, Greece, and Spain all would have, okay? They're called the pigs. But let's not talk about what we think the probability is. Why don't we go to a open market source of an evaluation of the likelihood of the USA defaulting? It's called credit default swaps. Do you want to go there? Because I'm going to show you an open market evaluation of what the likelihood is. So please punch up this. Type in world government bonds. So worldgovernmentbonds.com.
Just a second, I'm just gonna Google the words in case I did a type. Okay, there it is, yeah. Bonds.
Okay, and then go to CDS, okay?
Where is CDS?
CDS, it should be right on the top, Sovereign CDS. Do you see that?
Yep.
Right there, go there. Now pull up that chart and show everybody, go down, and okay, up, okay, up, okay. Try and get that chart centered on the page.
This one.
Don't do the United States, just the chart. You see the chart that's at the bottom that has the Netherlands?
The table. Okay.
The table, yeah. Okay, go down a bit more.
Okay.
And make it bigger for me to be able to see. Okay. Okay. Go up though. It's too big because we got to see United States. Okay. These are credit default swap ratings, or otherwise known as insurance against the default of various countries around the world.
Okay.
These are premiums that people are paying in the market.
Okay.
They are buying insurance against the default probability of these countries.
Okay.
And notice that the people are paying this, which means the default probability is not zero.
Yeah.
Otherwise, if it was zero, nobody would be paying for insurance, but they are. So this is a reflection of the relative possibility of default. Okay. And notice you see United States at 15.2 basis points.
What does this mean?
It's a 5-year cost of insurance. Okay. So for 5 years, if you want to insure against the default of the United States, you need to pay 15 basis points.
A basis point is 1,000, 15,000.
No, is
10,000.
1/100%. Okay? So
that's 10,000.
What it means is on $10 million, you are paying $15,000 a year to insure $10 million worth of debt against default.
Okay.
If it defaults, you get your $10 million, and the debt is not worth $10 million because it's defaulted. But it's costing you $15,000 a year.
Okay.
To ensure that. Go down.
Just a second.
Chart.
And what is this plus 20%, plus 10%?
Okay, that's what the spread has changed since the last month. The variation in 1 month, it's actually increased. It's gone from like 12 basis points to 15 basis points. That's actually a stupid number. The better number is the probability of default number. The second, that means that there's a 25.25% chance that the United States defaults.
Okay.
It's not zero, and it's not huge, but go down. Here's the interesting thing. Go down, go down, go down, go down, go down. Oh, look at Russia. 100% chance they're going to default. Okay? And Turkey, don't laugh. This is your neighbor. Turkey has a 10% chance of default.
Oh my God.
Yes, oh my God. So stop fucking around, people. These are real open market rates on probability of defaults of countries.
Yeah.
You better own Bitcoin. If you are a citizen of Turkey or Russia, you better have someplace you're storing your monetary energy, because they're going to take it from you if it's in the form of fiat. They're just going to default on it. I mean, this chart is my life. I've spent 30 years trading stuff like this. Okay? This is reality. There's no central bank that gets in here and changes these rates.
Okay. This is the free market, yeah?
This is free market, sir.
Yeah, okay. Okay. Dollar strength index. Let's go through that then.
Sure.
Why
we already hit that a bit. We already hit it, but go again.
Yeah.
I think this is way more important than the dollar index strength, okay? But let's and it's going to take you a while to figure this out. It's in my paper, okay? The paper that I wrote, why every fixed income manager needs to own. Okay, go back to this thing. Anyone who owns bonds, okay.
Just a second. So I have this chart that I want us to look after, and this chart here that I want us to take a look. I'm mentioning the dollar strength index because in my mind I have some arguments from some people, and I want to go through them so you can explain, because they're saying like, oh, the dollar is so bad and they have so much debt. Why is the dollar went from 1.7 to 1.8?
Because they raised interest rates.
I know, but I want you to say.
But okay, because they raised interest rates. So people say, hey, I can put my money in US dollars and earn a higher yield by earning interest on that money than I can anywhere else in the world. So that makes the dollar go up in value. People are buying the dollar and selling their currency. The dollar goes up.
Yeah.
But again, it's only relative.
But still, the interest rate on the treasury is lower than the CPI, so you're still losing money.
Still, don't forget the difference between short-term stupid money and long-term stupid money. It's all stupid. They're just relatively less stupid or more stupid.
Okay.
It's the game. It's the Ponzi game.
Okay. Okay, so which one do you want to go through, or you said maybe to go...
It's okay. Okay, this one I love. Go back to your CPI, because that's really important. Your CPI chart. It was the one... Okay, good. Look, I want to run through some bond math with you, okay? Because you asked this thing about bond traded, the yield on the bond increased by 6 basis points, and the price of the bond fell by over $1 on $100, okay, yesterday.
Okay.
Again, if interest rates go from where they are now to where they should be, meaning that the yield on the bond is higher than the CPI.
Let's say it goes to 9%.
Yes. The treasury bond that is the current treasury bond at 3%, if those increase, if that interest rate increases by 600 basis points, right? Yeah. 6%, the price of the current 10-year bond falls by over $40 or 40%. Okay? That's the math of bonds.
Just second. That sounds crazy to me, and I don't get it. But I think I get it. Let me tell you how I get it, but it still doesn't make sense to me. To me, it sounds like it's gonna fall by that much because with the interest rate, you're gonna make up the loss. Is that it?
That's correct. But it's not the interest rate. It's the value of all of those cash flows equals a yield of 9%. And when the coupon is only 3%, but you have to get to a yield of 9%, the price of the bond needs to go down so much to accommodate the buyer to allow him a yield of 9%. But can you imagine losing another 40% on the price of a US 10-year bond? Oh my God. No wonder people are hoping that the yield doesn't go to 9%. They're going to lose their job and they'll lose returns for the next 10 years because they lost 40% in today's dollars. Okay? That's called bond math. All you need to look up and go to a bond pricing calculator. It's called duration and convexity. Okay? Don't do it now. Don't search for one now. I don't want to lose too many of your listeners, but it's where I've spent my life. Bonds are only mathematics. They are fiat contracts. There's no subjectivity in them. If you need to get the yield from 3% up to 9%, and the coupon is 3%, but the return of that contract needs to be 9%, the price of that bond has to fall by 40 points. Crazy, isn't it?
It sounds crazy, but I don't understand. If I gave you 100 million of a loan and you offer me, let's say 3%, and I literally gave you 100 million. That's what I gave you. And you offer me 3% for 10 years. And let's say at the end of the 10 year, I should get...
no, not at the end of the 10 year. Tomorrow, that same loan would be going for 9%.
Yeah, no,
you lent it to me today at 3%.
Yeah.
And tomorrow, there's a buyer of a loan. He could buy another loan exactly the same quality as you at 9%.
Yeah.
Or he can buy yours at 3%. Is he going to buy the one at 9% or you at 3%?
Oh, no.
The one at 9%. No, then the guy at 3% says, shit, I need to be competitive with this guy. How am I going to be competitive? The only way is for the price of this bond to fall by 40 points so that the combined contract equals the 9%. Okay?
I absolutely get it now. Yes, thank you. Now, because I was thinking, is this free market or is someone controlling? It's free market, and it's because when they raise the interest rates, it's a better yield, it's a better opportunity for new buyers, and then the old suckers, the old backholders, they need to decrease the price of what they hold in order to be able to sell it if they want to withdraw the money, if they want to exit the contract. Okay, now I get it. Thank you so much. Thank you so much. I got it.
Okay, perfect. Let's go to the next one.
Okay, so I prepared these two and this one. Which one should we go from first?
We'll go to the first one. I haven't looked at it that closely. So this looks like it's T-bond futures. Okay, no problem. So T-bond futures basically predict the price of the 30-year. And it's falling. And when the price falls, the yield goes higher. Okay? So that's the relationship between bonds. We just talked about it. When the price of a bond goes down, the yield on the bond goes up. So in this case, the price of the US T-bond has gone from 180 to under 150. It's lost 30 bond points, 30. So a bond that was at 100 is now at 70. And the yield has gone over the same amount of time from 2%, call it 1.5%, to 3%. Okay? 1.5 to 3% on a 30-year bond. Do the math again. It's 1.5 times 20, because 20 is the duration, which is called the duration of a 30-year bond. Duration is the first derivative of price, okay? I know I'm losing people here, but it's fucking mathematics. If you don't understand math, get the fuck out. You are too stupid to be in financial markets, okay? Don't go in financial markets if you do not understand mathematics. You're going to lose your shirt. Go into shit coins. You're stupid enough. Go into fucking shit coins. Don't go into financial markets. You're going to lose your shirt in financial markets. Oh yeah, as an aside, you're going to lose your shirt in shit coins as well because you're too stupid at math, okay? Bitcoin is pure math. Bonds are pure math. You need to sell your bonds. You need to buy Bitcoin. Full stop.
Okay, we got this chart. Let's go quickly through this one.
All right. That's 20 years, okay? That's that's the spread. That's the difference between the shape of the yield curve. And US 10 years to 20 years is right on top of each other. They both yield 2.35. This is dated because this is the slope of the yield curve. This is dated because US 10 years now yield almost 3%, but 20 years also yield almost 3%, which is saying that the yield curve, if you were to plot this out, time to maturity, yield, the curve is very flat between 10 years and 30 years. Does that make sense to you?
Yes.
They are the same yield. Okay. Normally, the yield in 10s is 2%, and the yield in 30 years is 3%. That's what's called an upward sloping yield curve. But right now, it's very flat. That's all this is telling you.
Okay. Okay. So, charts aside, I'm gonna stop sharing. Charts aside. Fed is trying to raise interest rates, but
Yes.
doing so, they're messing up their debt. They're running on a deficit in general, the US government. They're not getting enough money in and out. Q1 of 2022, I think it was that for the first time in X amount of years, they have a shrinking GDP. Is that correct? Was it for US? Am I remembering
US
correctly?
just announced last quarter a shrinking GDP. That's correct. But it's not the first time. I mean, the last time that GDP was negative was during the COVID crisis.
Oh, I see. Okay.
So GDP shrank, and the definition of a recession is 2 consecutive quarters of shrinking GDP.
Okay.
All right. So the GDP is shrunk for 1 quarter, and interest rates have been raised how many times?
3-4 times or something with
No,
very small.
once.
Oh,
Once.
Was it once?
Once.
Oh,
Okay,
before
the-
Q1. Before Q1, yeah.
Yes,
But in Q1,
once.
but in Q1 you had 1 more or something, 1 or 2 more.
No, you've had 1.
That's
You've
it.
had 1. Yes. And they
Okay.
think they're going to do 9 more.
Oh my God. Oh my
Fucking the biggest joke I've ever heard in my whole life. Anyway, it's not possible. They are going to put the country in recession. Now, the Fed has a dual mandate, right? They have the mandate of controlling inflation and full employment. Well, right now they can't control inflation because it's skyrocketing. So the only way they can control inflation is by raising interest rates crazy amounts, which is going to put the US in recession. It's already 1 quarter into recession right now, which means they can't satisfy their second mandate, which is full employment. Whoever designed these 2 mandates, probably was an economist at some foolish university, okay? Jesus Murphy, they've never sat in a risk chair and seen how markets work. You can't suck and blow at the same time. If you send the United States economy into full-blown recession, unemployment is going to go through the roof. And then the Fed's going to have to reduce rates, which means they can't control inflation. So it's circular.
Okay. What does this mean? We're gonna have hyperinflation? What does this mean?
Yes, you need to own Bitcoin.
Oh my God.
What do you mean, oh my God? It's simple. Don't overthink it.
Okay.
Don't own bonds. Bonds are a horrible investment.
I'm gonna throw at you this word and just tell me the first thing that comes to your mind. Stagflation.
Okay. I mean, stagflation is, by definition, a stagnant economy, which is not growing, and inflation.
Okay.
We are in stagflation right now.
Okay. Okay. Things are very bad.
They're not good. They are not good. And the market's telling you this. The NASDAQ is down 22% last quarter. And bonds are down 10%. First time in history that both of those assets have been down over 10% in the same quarter. History. First time ever. Imagine if you're an asset manager and you own bonds as protection against stocks, and your bonds are getting hit by a negative 10% return. Dude, it's ugly out there.
The thing that scares me the most is not hyperinflation, because I don't care. I'm not in fiat. I'm not afraid of that. There will be a lot of pain for people who do not own assets, I get it, but let's say I don't feel that threatened by that. The thing that fears me is a sell-off of equities because people are out of job because of inflation issues and because of economical issues, recession. They own some equity and they need to sell it in order to be able to pay their rent and not get on the street. And this is why we have a crash on equity prices. So S&P goes down, houses go down, everything goes down while we have very high inflation of all the products in the store.
Yes. What can I say? Yes, that's a potential outcome. I mean, already in 3 months, the NASDAQ has done a lot of that crashing, if you will, right? Imagine if you're a US pension fund and at the beginning of 2022, you were fully funded, but now your bond portfolio is down 10% and your equity portfolio is down 22%. You're not fully funded anymore. Your pensioners may not have the pensions that they're counting on. It's no different than a guy who has an equity portfolio that he's saving for retirement, and all of a sudden that equity portfolio is worth 20% less than it was 3 months ago.
I want to go through one chart with you, but I'm not going to be able to find it. It was the Canada housing prices compared to the median income of Canadian. It was something like
don't worry about Canada. We are so messed up, it's not funny. I mean, it's really a shame. We're a great country. We have a buffoon as a prime minister, full stop. That's all we can do. That's all we can say.
Okay. While we're on this, another one, I haven't prepared it, but it was a tweet, something like, the next halving is not priced in, and the guy was like, fuck, nothing's priced in. And he said, in Canada, the freezing of bank accounts, in Russia, the freezing of their sovereign reserves.
Nothing's priced in. It's a rounding error. I talked about this at the beginning of the show. But you said that Bitcoin is dead because it hasn't gone up. Look, don't live month to month. Do it over a period. Are you going to live more than 20 years? Yes, I hope you are. Okay. I'm not sure I am because I'm already 58. All right. I'm just telling you, take precautions and let's talk in 20 years. I don't give a shit what happens in the next 6 months with the price of Bitcoin. The lower the price, the better for people who need to get in for 20 years down the road when it reaches my price target. Okay. And incidentally, my price target of 2 million in today's dollars, 20 years down the road, will probably be $20 million. You can't fathom this shit. Because did you know when here's a cool thing. When I grew up at age 12 and McDonald's, I could go to McDonald's and buy 3 hamburgers for $1. 3 for $1. Now you can't even get 1 for $3. Okay, like that's called inflation, and it compounds. You don't feel it so much in the first year, but over a period of 20 years, man, do you ever feel it? Because it's compounding. 8.5% compounded. Maybe next year it's not 8.5%, but what if it's 6.5%? Those 2 years is 15%. Compound inflation. Holy moly. I hope I'm sinking in here, okay? Because this is what Bitcoin solves. Don't worry about all the other shit coins out there. They don't come close to solving this.
I constantly try to preach that Bitcoin and crypto, two completely different things. Crypto trying to find their own niche, their own thing, their own problem to solve. Bitcoin solves only one problem, does only one thing, and that's it. So it's completely different things.
And until layer 3 Bitcoin solutions allow for NFTs and allow for any application that's built on Ethereum, for example, to move to the most secure Bitcoin, or the most secure blockchain, which is Bitcoin. I believe that Ethereum is a test net for layer 3 Bitcoin. Any successful app on Ethereum will move to a secure blockchain, decentralized like Bitcoin. Ethereum is not decentralized. It's moving, okay, so it's going to move to proof of stake, but we're going to delay that because the network is, they're not getting it right yet. I'm not dissing Ethereum as much as I'm just saying people focus on Bitcoin, but the upside of Bitcoin includes the Lightning Network, layer 3 solutions, different protocols, very calculated, very decentralized. Yes, it happens slower than you may like, but unlike Solana, it doesn't go offline, okay? It doesn't fucking stop working. Every 10 minutes, a new block, okay? Anyway, I sorry I'm swearing a lot. Sometimes I get frustrated. I love the fact that when I see the aha moment in your eyes, your aha moment today was, what the heck is this debt chart? Like, you've never seen it. They don't tell you this because they can't tell you that the numbers are so asinine. If everyone knew, well, Charlie Munger knows he's just not telling the truth, okay? Yeah. What a sorry old bastard, okay? He is a fucker, not telling the truth. And if he doesn't know the truth, then he shouldn't be managing the amount of money he manages.
I was waiting a few weeks ago, and I was able to communicate with people outside of my circle. So I did like a personal poll where I just asked people about, is there inflation? What is the inflation? Have they heard of CPI? And I asked a lady who has a store, a guy who is a big data analyst, and a guy who's a software engineer and so on. And neither of them have heard of CPI. I was literally mind blown that these people that are part of the real world, of the real economy, are paying taxes, are getting paid. They don't even know that there is an official government statistic, an official number that tells you inflation is this much. They were like, how can you even calculate that? Well, how? Like, it's not that hard. You just measure the change of the price of the goods and services. Anyway, and they didn't know the difference between a central bank and
I know, but this is because they don't teach you this in school. Because if they did teach you, people would never put their money in commercial banks because they realize how risky it is.
I want to hear your take on this. This is the World Economic Forum. A change in the way Bitcoin is coded could almost eliminate its environmental impact.
Fuck them. I don't even want it. These guys are so conflicted and they're so stupid. It doesn't even matter. Stop showing me that bullshit. These guys are evil, okay? If you want to point a finger at evil, this is evil. This is pure FUD. They don't understand how the Bitcoin, how electricity grids work, okay? They are a bunch of buffoons, conflicted buffoons. So please take that down. It makes me sick to my stomach.
Okay. Then this one, hopefully this one is going to make you feel better.
Yeah, that's perfect. Because we talked about this already.
Yeah.
Fidelity has done the work, okay? Now they are offering it to their clients. Fidelity is one of the top 4 largest asset managers in the world. If Fidelity's offering it and BlackRock is not offering it, BlackRock's going to lose clients to Fidelity because the clients want it. I've already told you what Orlando Bravo's seeing. So either BlackRock gets on board and starts offering digital assets as well, primarily Bitcoin, or they lose clients. Very simple.
I remember last year when the banks started falling one after another. Can't remember which was the first one, but Morgan Stanley, Wells Fargo, JP Morgan, all of them started offering Bitcoin to hashtag their wealthy clients. And they had some insane requirements, like you have to have like 2.5 million managed by them or something like that in order to be able to purchase Bitcoin. And of course, it was with some very small percent, like 2-3% or something of your money you could put in Bitcoin. But the dominoes started falling one after another. And now you're saying that what Fidelity's move is gonna bend the arm of BlackRock to have to do the same thing.
Yes, because they're competitors.
The next one is this one that I wanna hear your comment on.
Don't. I can't stand this lady.
Did you watch this clip where they talked about?
I don't think so.
So they said that we printed too much money and we
they
didn't
laughed
think of
about
the
it.
consequences.
Isn't that disgraceful? They laughed about it. She should be thrown in prison. You don't laugh about this. This is not a laughing matter. This is absolutely disgraceful. And she's unelected. Who put her in charge? Get her the F out of there. She's stupid, she's dangerous, and she jokes about it. Sorry, I'm getting upset, but my God, like, dude, this is, fuck. The US is, Europe is so screwed, it's not funny, okay? And it's so screwed because of people like her.
I am happy, by the way, how you react, because this is how I react as well, and I'm not reacting at the moment like that just because you're doing it for me, you know, and I'm smiling because I'm happy that you see it the way I see it, okay? Like just a second, like I have to stop this presentation and I have to share this window. So just the other day I shared the same video and someone added subtitles in Bulgarian, okay? And I said here, this is a post from 23rd of April, and I said, you are a slave and this is your slave owner. When your slave owner tells you that he's made a mistake, he doesn't take any responsibility for that. He doesn't, how is it called in English? When you resign, he doesn't resign. He doesn't go to jail. He doesn't even say, I'm sorry, because you are a slave and this is your slave owner.
I love you.
Remember that. Remember that well. You beaten dog. Nothing.
You beaten dog. I love you.
Nothing depends from you because you're a slave and this is your slave owner.
Yes.
So it's like a wake-up call.
Yeah, I mean, that's exactly it, buddy. I mean, I can't say it any other way. I wish I spoke Bulgarian. I wish I spoke Spanish. I speak French, but you know what? Spanish is important because of South America and the adoption that's taking place down there. Europe is a lost cause, okay? You guys are so backward ass, it's not funny. And you're backward ass because all of your governments are socialist, communist leaning. There's a few good guys. Some of the Croatian politicians are finally speaking the truth. But anyway, it's discouraging. It's over mathematically. And then these people are laughing about it. What an absolute atrocity.
I was really sorry that I didn't come to Miami this year. And I truly am. And I said because these people who were there this year, like no one guarantees you, no one tells you that they will be there again next year. So if you tell yourself, oh, I'm just gonna be there next year, well, maybe next year Greg Foss won't be there. Maybe you won't be able to meet him in person. So listen, I think this is good enough. We went through the charts pretty much. It looks
well, let me just expand on that, okay? Let me just expand because we got to talk about what happened in Miami.
Yeah.
It is such a beautiful community of people who care about the future of our children. Okay? Christine Lagarde laughing about it is essentially laughing at your children. Okay? You sorry people, I screwed up and I'm going to laugh about it, but you're the ones that are going to suffer. Okay? Bitcoin Miami is the opposite. We don't talk about the price. We don't care where the price goes, up 5,000 or down 5,000 or whatever. We just are building a system that's going to basically rescue the world. Okay? And you got Christine Lagarde who's trying to stop this system because she is such a conflicted old hag, okay? A disgusting individual who is so unethical that she laughs. We made a mistake. Oh my God, I got 3 kids. You disgust me, lady. And how else can you say anything else? Except at Bitcoin Miami, all I did was smile. I smiled because I was surrounded by people who are working to make the world a better place. Okay? You can live with these cucks, okay, like her, and be so discouraged, or you can work in an environment that's trying to build a better world with people who are humble. They don't talk. I was on stage with 4 billionaires. Not once did they ever say stuff like, I got so much money, I don't care. No, they want to help change the world, okay? You're talking with people that care about people who are at the bottom end of the spectrum, who will benefit from Bitcoin. So it was so refreshing. It's a reinvigorating process. I'm looking forward to next year. I hope I get invited back. I shared some stuff with people there that was personal. I mentioned I suffered mental health challenges. Okay. It's just a wonderful community that reaches out and wants to help other people. And Christine Lagarde doesn't. All she wants to do is laugh. She laughs her way to the bank because, you know, she's fine. And she's stolen so much money from everybody that she's fine. That's not the way the world works, okay? The world is full of givers and takers. Bitcoiners are givers. Christine Lagarde is 100% a taker. I'd rather live with the givers and help the world become a better place.
Awesome. Let me just ask you one more question,
Sure.
which is not exactly Bitcoin related, but it's very important.
Sure.
So over the weekend, this is the map, Google Maps of Sofia, the city that I live in here.
Okay.
And this is, if we zoom out, this is Bulgaria. So our neighbor here is Turkey. This is Turkey. Here is Istanbul.
Okay.
And here is Greece. And here is, I don't know, Thessaloniki, so on. Here is Athena, for instance. Here we have North Macedonia. Here we have Serbia. Here we have Romania, and so on.
Okay.
And my point is that I went to Hrvatska, Croatia, actually. So the road goes from here, goes through Serbia, the country, and then goes in Croatia. And I was here on this Krk island here.
Oh, beautiful.
And there, I was with some friends, and we were commenting. They are non-Bitcoin friends. They are some architects from Slovenia, and we were commenting different things. And on the way to here, to this island, I showed the road, because on the way to this road, on the way to Croatia. So again, Croatia, the island is here. The road is this one, and we started from here. Around here, so like 50, 60 kilometers away from the border, there was military equipment being sent on the highway towards Bulgaria. We were driving west, and the military equipment was going east. And when I say military equipment, what I mean is in London, in central London, in here somewhere, there is an old Belfast. This thing, it's an old how's this called? An old ship.
Battleship,
Battleship, yeah. So these guns, they were carrying guns like this.
Yes, okay.
And it's a massive gun. It's like 5 meter long, or I don't know how many, 7, 10 meter, whatever it is. Not 10 meter, I think like 5 to 7. And they were on the back of these trucks, or whatever they're called.
Yes.
And they were carrying them this way. And it was like 30-40 convoy with police escort and so on. Yeah, and I'm thinking, are they coming to reinforce their border with Bulgaria? At the same time, Bulgaria doesn't have any military. Like, we are extremely weak military. We don't have any. We don't have the mandatory military training of men. We don't have any, like, if we do have, it's like 3 tanks or something like that. It's like nothing. It's just for the show. That's it. And I'm thinking, are they sending them towards Ukraine through us? Are they coming to secure their borders, sending towards our border to secure us, or what's happening? And anyway, on that meetup in Croatia, we talked, and I said, I am not dying because bombs are coming on my head. Like the first sound of an alarm, I'm getting on the first plane and leaving the freaking country. I was thinking, because I have UK paperwork, to go to UK. As I lived there for 5 years, but just the other day there was this clip, some Russian guys on national television.
I know. Okay, you gotta stop. Okay. Let's focus on good shit. Okay, like I don't think that Russia would ever nuke London, England, but it's not a 0% chance. Okay. The world is becoming more unstable. You need to take protection, but let's look at the positive things that Bitcoin can bring. Bitcoin in its own way can battle all of these things. It makes the world equal. You don't need wars to satisfy a deficit. You know, every time a country needs to capture riches, it goes to war and takes the riches from another country. Okay, that's what wars are. Plamen, I'm disgusted with the wars in Europe. My grandfather fought 2 world wars. I'm lucky enough to have fought in 0. But my granddad did not fight 2 world wars for freedom to have to listen to Christine Lagarde laugh, okay, when she's made a little bit of an error. That is disgraceful. It's a disgrace to everybody who has fought for freedom. Will she ever be ashamed of herself? Nah, she'll just live in her little old dainty castle. Get a suntan every single week, you know, that God forbidden wrinkled skin she has as a face. Like, you know, it's and I'm throwing out insults because she insults our intelligence by laughing at us, okay? I am not a fan of lying to people. So I guess all I would say is there's hope. Bitcoin is hope. Bitcoin is freedom. Act accordingly.
Okay. Thank you so much for your time.
It's been great. I love talking with you, dude. I understand, you know, the old world. I've been to Czech Republic, to Prague, and I just loved how beautiful that city was. And it was at the cutting edge of technology and everything. You look at the clocks in that old city, and guess what? Time stopped when they became communist, okay? Innovation stopped. People stopped having hope. You just see it in the architecture of the buildings. Don't let that happen again. Fight for your freedom, okay? Bitcoin is freedom. Christine Lagarde is Prague when it turned communist.
Listen, it sounds like we haven't visited Europe in a while. We have to do it. In October, we are going to have the second Bulgarian crypto conference, Bitcoin conference.
October? Interesting. Okay, but we're doing something in October in Scotland as well. So maybe it would be a nice combination.
Yeah.
Jeff Booth is coming with me. So perhaps we could skip over to Bulgaria as well. Who knows? But,
absolutely. Listen, we are flexible on the dates. If you and Jeff Booth can give us a date that you can make it in Bulgaria, a weekend date, we are doing it that weekend. So we can have you as the most honorable guests. We would really appreciate it.
Well, let's think about it. Let's see how things unfold, okay?
Okay.
Have a great day. Thank you for having me on your show. Study math. Study mathematics. Please, people. Bitcoin, not crypto. Thanks so much.
Bye.
See you, buddy.